The U.S. economy is unraveling fast. That, according to Peter Schiff, known perma bear. But you've got to appreciate his consistency. He is highlighting soaring debts, rising inflation, banking sector risks, massive layoffs, bankruptcies in the retail sector. Again, folks, we have talked about these tariffs, and the impact it is going to have across the U.S. economy is just starting to be felt. You have seen some companies announce some layoffs and more to come. Again, I don't think it's any question for folks on this channel that Peter Schiff has been rather negative on the U.S. economy for decades, but that doesn't mean his thoughts on where we are currently aren't worth at least inspection. One of the things hopefully you've noticed about me on this channel is I read both sides. I consume what most might call doomer headlines. Now, let's be very clear. I think there is a big difference between a crash bro who is nothing more than a failed mortgage broker, a failed real estate agent, or a failed underwriter, versus somebody who spent time in the industry, may have a natural bias to the downside. I respect people who are in the business and maybe look at the data and see a different outcome. That is very different from a daily drumbeat of crash bros who have been wrong for 5 years, but yet are printing money because of gullible followers. So in the end, I do think Peter Schiff is somebody I will pay attention to. Again, he's been wrong for decades, but definitely worth reading. Apollo chief economist Torsten Slok. Again, somebody you might want to add to your Rolodex of people to follow. He is the chief economist again at Apollo. 90% chance, get this, this is what he's calling it, a voluntary trade reset recession. I don't know why we have to be cute and call it something. A recession is a recession. Again, maybe he's trying to trademark something. I don't know. But again, 90% chance of a voluntary trade reset recession. Higher tariffs. Uncertainty about more tariffs. Retaliation from tariffs. Lower tourism. Lower consumer confidence. Lower corporate confidence. Lower investor confidence. Negative wealth effect. Doge layoffs in government, et cetera, et cetera, et cetera. Again, folks, I've been talking about for the last several weeks, we are in a very dangerous place, especially with consumer confidence. This thing is slipping away and really could cause a recession to potentially start even here in Q2. We are seeing, at least this morning, I haven't checked recently, but this morning when I was up at 5:30, we are seeing the dollar down and rates up. Again, that is not natural. When you are the reserve currency of the world and rates go up, the dollar should get stronger. We are continuing to see the theme that started several weeks ago. Is this just foreign entities reallocation? Is it flight to quality? I don't know, but it's definitely something we need to look at. We definitely have lower investor confidence around the world, and I think reallocation is something you cannot question. Bloomberg highlights that Trump tariffs have created a COVID-level uncertainty in the business community, specifically highlighting small business. And I think that's wild to think about, right? I know COVID's 5 years ago. I know a lot of us just want to remove it from our memories. But you got to remember, being a small business back then, they were closing shops. They were making it illegal to be open. They were just doing all kinds of wild things. And to think that small businesses are suffering through a similar crisis of confidence and uncertainty today is ungood. Fed President Goolsbee, out talking on the wire again, actually said, I still believe rates will be lower in 12 to 18 months. Again, higher for longer. Obviously, I don't know if you've seen the news today, but Trump is once again attacking Powell, calling him Mr. Late. Yes, Mr. Late, saying that we should have preemptive rate cuts start immediately. I do have to ask you one question. Do you remember what happened last time Powell cut rates? Let's just play devil's advocate for a minute and say Powell listened and cut rates. Does that mean the 10-year note goes down? Now, if you've been paying attention the last 6 to 9 months, you know the answer to that. The 10-year note very well might go up, which is actually what happened the last 3 times the Fed cut. Yes, folks, the Fed has cut 100 basis points, 2 25s into 50, and the 10-year went up. Second, what would happen to confidence if Powell relented and bent the knee to Trump? Would the market see that as a good thing? Would that weaken the nature of the Fed? Probably. And again, sometimes you have to be careful what you wish for. I do want to remind you folks and thank all of you who went to Spotify yesterday. Yes, folks, One Rental at a Time is on Spotify, Apple Podcasts, things of that nature. If you like to get your stuff from podcasts, do me a favor, subscribe to One Rental at a Time. All of the content from this YouTube channel does end up on Spotify. Don't know if you know this, but we've had 10.1 million listens. I think I've had 21 million views on YouTube, so about half the views on podcasts. So again, go check me out on Spotify. And the Zuber letter this week is meaty. The Zuber letter, again, go to zuberletter.com. We talk about the 13 painful investing lessons from the last 5 years. Go check it out. I do think we have to ask ourselves, what is gold telling us? I don't know if you guys have seen gold, but it is on a tear. Is it telling us that there's losing faith in the U.S.? Is it losing faith in the dollar? Is this just a worldwide reallocation? I don't know. But gold and frankly, Bitcoin, I don't know if you've seen Bitcoin the last couple of days, are really starting to act differently. And of course, treasuries are being sold by someone. Again, prices down, rates up. Seems to be the trend here recently. We do have some talk of housing prices. We've got Mark Zandi. Again, this is on the back of Zillow. Remember, Zillow last week went negative. Yes, Zillow basically calling for negative 2%. I think it was negative 1.7, but let's round to 2. Mark Zandi also cut his price forecast. He's now at 1.8. That will be the lowest since 2011. Mark Fleming cut his price target down to 2%. Chen Zhao, chief economist at Redfin, says prices could fall slightly year over year, less than 1%. Again, home buyers today are in a very weak position. They are expecting wages to go down. That's not good. They are expecting higher unemployment. That too is not good. And finally, the negative vibes on the economy are really spiking. Folks, this is demand destruction. As I've tried to help you understand and educate you a little bit, we may see a slight bump in inflation in, say, May or June, given the base effect and the initial impact of tariffs. But I think what we are very quickly going to see, call it August, September, October, is a real risk of deflation. I'm not talking disinflation. I am talking deflation. Consumers have the ability to sit on their wallets and simply not participate. And again, if you think about consumers, investors, business owners, we talk about the highest level of uncertainty since COVID. I don't know a lot of people going out and making significant decisions. I do want to thank everybody for joining school yesterday. I know it was Easter. We did do a live. I posted it already in school. We talked for almost an hour. I will also be going live next Sunday inside school. I'm going to try to go live every Sunday. So let's say there's 52 Sundays in the year. I expect to go live 45 times or so. 8 a.m. It's my allocated time for school. I want to make sure you get in there, make sure you get a lot of value. You can get 4 hours of my time every month. And I just want you to understand that the year of the investor is here. If you want to talk deals, you want to talk what to do, I'm there for you. Join school, 67 cents a day. Talk to me, 4 times a month. Most months, get some masterminds and education. Just as an example, the out-of-state investing mastermind this week talked about seller finance, marketing direct to seller, picking a market, economic drivers, turnkey versus value add, Section 8, and buy box. Folks, these masterminds, accountability groups are absolutely one of the greatest reasons to join school. You have 6 to choose from. And again, find the one that fits your schedule, fits your topic, and you will enjoy that. Another thing from Fed President Goolsby, tariffs could lead to a summer drop-off in economic activity after an artificially high start. This is exactly, again, something I'm trying to help you understand and help you get educated on. We will likely have a bump at the end of Q1 because consumers and, more importantly, businesses stocked inventory, right? Consumers bought cars and, big purchases, but businesses were stocking inventory en masse to get ahead of the tariffs. That will artificially make Q1 look good. Q1 GDP will look good based on this statement from Fed President Goolsby. However, there is a cost. Anytime you pull forward demand or supply, you will create an unnatural air pocket. That air pocket will lead to a weaker Q2. It could be the thing that kicks off deflation as companies realize they're not selling what they have, so they have to cut prices. This could get ugly. Don't know if you know this about gold, but apparently gold is up 100% since 2020. Think about that. And the S&P 500 is only up 86%. Actually, it's not quite that much because I think it's down today. These numbers were from yesterday. So again, pretty interesting to see gold outperform the S&P 500. Folks, at the end of the day, I hope you have an amazing day. Let's congratulate somebody for getting their deal. Jim, as I promised in school yesterday, Jim, I'll be sending out your golden ticket so you can go ahead and get that and use it to your heart's content. Folks, I hope you have an amazing day. Like, subscribe, comment. Never forget that 2025 is the year of the investor. More supply, less demand, more motivated sellers. It's your job to get creative, learn creative financing, join school, get in the communities that are helping. I hope to see you there. And of course, remember, we will go live 8 a.m. Pacific on Sunday. Take care, everyone. Later.